Good morning, everybody. Today's April 6th. It's Tuesday. I hope everybody had a wonderful holiday weekend. We were a little quiet last week, knowing that a lot of folks were going to be out on vacation, but we're back today with some information tracking what's going on in gold markets. Today, I thought there's something really interesting we're sharing with everybody right now. Normally, I don't want people to be distracted with short-term moves, but one of the things I look at as a career trader is I look at the price of anything, whether that's gold, silver, or stocks. We look at it when it's consolidating. And as I've commented previously, gold has been consolidating and just moving in a sideways pattern here now pretty much for over a month. And you can see that really starting towards the end of February. And what it looks like is that we're very close to it breaking out. And if it does, if it gets above this high here, which is about 1758, it's not unreasonable to expect it to move. Of course, this could kind of fail and then drop back down into this trading range. But typically when you get this type of compression in any type of asset class, it's worth paying attention to. So I wanted to bring that to everybody's attention. More interesting is this other chart. I put this together today because, as you might expect, gold miners and the price of gold tend to move at the same pace, and they move in conjunction. And the reason for that is that the higher the gold prices are, the higher the margins for gold miners. And so here's the chart of gold. It's in the amber color here, as close to gold color as I could get on the chart. And the blue chart is the gold miners index. This is the ETF, the GDX ETF. But what's interesting here is, looking at the news today and taking a look at the price for gold miners in 2020 and their margins, these guys crushed it. Gold miners have done absolutely fantastic from a cash flow perspective, and they're hitting record highs. So the all-in sustaining cost, which is the margin for gold minus the cost to produce it, hit an all-time high. And you can see that in the chart here. I'll post that on the chat in a moment. So returning back to this chart, let's add one of the biggest cash flowing monsters out there. This is a gold mining company. They're big boys, called Franco Nevada. And what you see here gets really interesting. Let me clean this chart up here so that everybody can see the same thing. And what you'll see is that Franco Nevada has kind of broken away from this trend here. So gold prices have been drifting down this year, and gold miners have, in sympathy, moved with them. However, Franco Nevada is starting to break out of this. I believe that this is because the market is starting to recognize the cash flowing power of commodity producers and big miners, and recognizing how fat their margins are. Imagine what those margins look like if gold moves up to $2,000 an ounce or $2,500 and really starts to make new highs. Well, the mining community is going to be big beneficiaries of that. So this is your lesson on gold mining. Hope you found it helpful, and look forward to posting more material here this week. Have a great week. Take care.